Hi, in today's video we're going to learn how to identify when price wants to break out from support or resistance levels. So one of the most critical abilities a trader can have is the ability to recognize support and resistance levels. So this ability allows you to see how the price reacts when it approaches the support or resistance level. As a result, determining the ideal spots to enter or quit an opening position becomes easier. But in most cases, the price will hit the resistance or support and then reverse. In other cases, it will break through the levels of support or resistance. So in this video, I will teach you how to spot when price is attempting to break through the level of support or resistance, and also what you should do in such a situation. So the question is, how do you know when the price is about to break through the support or resistance level? So I'm assuming you're familiar with support and resistance levels. However, in a case you didn't know, these are price levels within which prices appear to range. That is, price do not appear to fluctuate much above or below these levels over time. When the price of an asset changes over time, it usually reaches a point where it returns it to its previous level. So this is the resistance or support. At the lower price point, support forms, where at the higher price point resistance arises. So the levels of support and resistance are either modest or strong. The number of times the price has struck a support or resistance level before rebounding back or reversing back is used to determine its strength. So when it comes to strong support and resistance levels are ones that the price has crossed several times in a short period of time. So it's deemed weak if price only strikes a support or resistance level once before breaking through. To break through a significant support or resistance level, price momentum must be very strong. So this brings another question, which is, how do you know if price momentum is strong enough to break through support or resistance levels? Okay, so what's the answer? So first of all, you should first detect the dominant trend using candles chart. If it's really a strong one, you will note that the candles that form are generally larger, with two or more of the same color candle forming in a row. Okay, so you can also expect substantial price momentum if there is a news or economic event on the horizon. That is, if you trade currency pairs. Okay, so prices will move in a specific direction shortly after the news is released, frequently breaking through support and resistance levels. So in some cases, or most cases, a price consolidation occurs just before it reaches the support or resistance level. That is, the price is restricted to a small range. Then the price has gathered enough momentum as it approaches the support or resistance level to break through. But however, before finally breaking through, the price frequently falls back into the range again. So this brings another question, which is, how do you avoid false breakouts? So when it comes to false breakouts, they happen when the price break out of the support or resistance level only to fall back into the range very quickly before the trend reverses. The majority of traders lose money due to false breakouts. Okay, they are very common. So examining how the price behaves when it meets a strong support or resistance level is one technique to avoid false breakouts. That is, what kind of pattern emerges. So when the price hits the resistance, they will develop a downturn as seen in the image on the screen. So when the price breaks through resistance but remains above, this is known as a fake breakout. Okay, then a solid bear candle breaks through the support, signaling that the start of a decline or the start of a downtrend. This is the place where you should start your business now. And finally, the last question is, what should you do if the price breaks through the level of support or resistance? Okay, so you can expect the trend to continue in the same direction if the price breaks through the weak support or resistance level. So consider how the price reacts when it reaches a strong level of support or resistance. If you look at our chart previously shown, okay, you'll notice that the price is frequently in a downward trend, but you have to wait until the markets behave like they did when the price hit the support or resistance level. If the breakout occurs, it's now or never to get into the trade based on the current trend. So what causes false breakouts? Well, false breakouts happen when traders enter a market that is already overextended and poised to reverse. In that case above, it's likely that many traders anticipated the trend would continue upward. So professional traders, on the other hand, understand the importance of waiting till the markets behave as they did when prices hit the strong resistance level. And when this happened, the downtrend began to indicate that it was time to sell. So to finally answer the question, to avoid false breakouts, you should enter trades based on price movement or price action. So knowing how price responds when it reaches support or resistance level as indicated gives you a notion of how to trade when it does so again. As a result, it is critical to read your chart in comparison to your trading sessions. I normally propose that you trade using a wider time frame. If you're trading 5-minute candles, for example, you should look at a 30-minute or 3-hour chart. Okay, so to conclude, there are times when the price breaks through the support or resistance levels repeatedly. Additional tools and indicators might assist you in determining the optimal time to enter and exit. Okay, so if you learned something from this video, you can give it a like. For more videos like this, you can go on and subscribe. Bye for now, see you in the next video tomorrow.